So here we go. Welcome everybody to our webinar, GreenLight Equity Groups and Partners webinar for this exciting investment opportunity in New Albany, Ohio, which is a northeast suburb of Columbus, Ohio. And it happens to be the same municipality, same neighborhood where the new Intel plant is going to be built that they just announced a couple months ago. That's a very fun part of this story that is behind this particular asset, and we'll get into that, delve into kind of how all this came together with the letter of intent and eventually the purchase sale agreement in the same timing with the announcement of the Intel investment. The Intel investment is going to be the largest superconductor facility of its kind in the world. It's going to be a $20 billion initial investment, projected to go up to as high as $100 billion. So it's going to massively transform the economy in New Albany. And we feel like we've kind of caught lightning in a bottle here with this particular asset. There we go. And the timing of us getting this deal and the timing of the announcement were essentially simultaneous. And so we feel very fortunate to have this asset. We feel like it's a very sexy story, and look forward to sharing it with you. So my name's Tate Seamer. I'm the CEO and managing partner of GreenLight Equity Group. Chelsea Garber is our co-host today and co-MC, and we're really excited. We're glad you're here, and we thank you. We hope that you enjoy this, and if you feel led to join us on this journey and be an investor, you'd be honored. So I'm going to go ahead and share our PowerPoint presentation here. I'm going to be juggling back and forth between letting people into the webinar, and at least for the first couple of minutes or so. But let me go ahead and share my screen. And we'll go to our slideshow for the day. So this is a picture of the property that we are purchasing. And this is I don't know who that is to mute them. So let's try this one. I'm going to mute everybody. Let's see. Okay. There we go. So this is a 43 unit Class A apartment building that was just built in 2021. The CO was issued in January of this year, and the property is currently being leased up for the first time. And we will be purchasing this property once the occupancy of the property reaches at least 90%. The projection right now is for it to be at 100% before our closing date. So we should be purchasing a fully leased up property. And again, we'll get into amenities and features of the units here in a minute, but I want to share with you a little bit first about our team. And actually, before I do that, let's talk about the fun legal stuff, right? The disclaimers. I'm not going to go through these in detail. However, I will point out a couple of things. This is like any other investment. Investments involve risk, and there's no guarantees on how things will go in the course of ownership. So it's important that you understand the risk, the private placement memorandum that's associated with this deal goes in depth into this stuff. And so it'll be important for you to review that. The other thing I want to mention is that this is a 506C opportunity. And what that means is that only accredited investors are able to participate in investing in this property. If you have questions about accreditation and whether or not you might be accredited, it's really best to talk to your CPA or a professional. We can help you with that as well. You will be required to submit proof that you're accredited, and that can come in a number of different forms, one of which would be a letter from a CPA. So that's important to know and to understand as well. So want to real quickly before we get started, I want to introduce the team. So again, my name's Tate Seamer. I've been in real estate since 2006 with one of my partners here, Carl York, and we really cut our teeth in the single family world for quite a while, and did the flipping game, and we eventually got into some new development and land deals. And then about 4 years ago, we rebranded our company as GreenLight Equity Group, and really entered the multifamily space, and have been pursuing properties in the multifamily space, in the larger scale multifamily space now for about 4 years. Just a couple of little things about me. I basically run the show, right? Like I'm captain of the ship, so to speak, and really stay focused on like high level overview stuff, in addition to, going deep into details of running our business. Luckily, I have amazing partners that I work very closely with, and our managing partners in our company, actually. So one of those is Chelsea Garber, who's you will be hearing from in a few minutes. Chelsea is a native New Yorker, and she's very proud of that, as a matter of fact. And Chelsea is, like I said, a managing partner with us, and is our director of acquisitions. She and I really kind of tag team that end of our business. We underwrite deals together. We write LOIs and make offers together, and then we handle like all aspects of the acquisition together as well. Carl York, I mentioned here a minute ago. Carl is again a managing partner with GreenLight, and is our chief operating officer, and he brings a ton of experience in project management and asset management to the table, in addition to lots of handy skills and technical skills. And Carl has a family of 5 and is a skier and a mountain biker, as am I. And then we've got Mr. Tim Watkey. Tim is our KP on this deal. And by the way, we all 4 of us, pardon me, I didn't mean to do that. All 4 of us live in Utah. And Tim has quite an impressive portfolio here that he's been working on for 29 years. It's currently valued over $170 million. And over 1,400 units. So Tim's had a lot of success in this space. He's done both existing models and also new builds. He's developed apartment buildings and communities around Salt Lake City, and he's now in 7 different states. And last but certainly not least is Alex Marsh. Alex is our boots on the ground, kind of eyes and ears in Columbus, Ohio market. Alex is a native Colombian, I don't know if that's the word, but a Central Ohioan, and graduated from Ohio State University in Columbus, and is a broker with the WEILER Group, and is somebody that we've done multiple deals with now, and we have a high level of trust in Alex, and really enjoy working with him, and we're excited to be partnering with him as well. I'll also mention the Thompson Multifamily Group, Mr. Sean Thompson and Abigail, and Sean's wife Diana, excuse me, and the Thompson Multifamily Group is also a partner on this deal, and will be participating in numerous aspects of the deal, from asset management to participating in this capital raise, and numerous other roles and responsibilities. So that's our team on this deal. We are really excited to be working with such high-level people on this, and we're all really excited about the deal and the asset. So before we get into the asset, and before we get into the specific submarket of New Albany, I want to just touch on Columbus, Ohio as a market. Columbus is a market that we've been looking in and acquiring in now for pretty much the entire time that we've been in business in the multifamily space. We picked Columbus for a number of reasons. The biggest of which is just its economic dynamics and its employment dynamics in particular. It's a very diverse employment base, and from Fortune 500 companies like Nationwide Insurance to the Ohio State University, which is the 3rd largest university in the country, to the state government. As many of you know, Columbus is the state capital of Ohio, and the city, state, federal governments are 3 of the top 10 biggest employers in the area. So you've got just a massive infrastructure that supports thousands of jobs, and between the university and the state capital, you've got a really solid economic base. But that's not the whole story. The Columbus market houses 5 different Fortune 500 company headquarters. One interesting note is, and I'll get to this in a minute, but that Alliance Data, which was located in Sean Thompson's hometown of Dallas, just picked up out of Dallas and moved their headquarters to Columbus, mainly because of Columbus's favorable business environment. And with everybody everybody's moving to Texas and Florida and Phoenix, especially on a corporate level, you've got a massive influx into Texas. So the fact that somebody like an Alliance Data, a tech company, and a Fortune 500 company would move their headquarters to Columbus, I think says a tremendous amount about Columbus. It's a good case study for this. Let me just let a couple people in here. There we go. So Columbus, just the story in general with Columbus is that Columbus withstands shock. So in other words, when the economies around the country really spike, Columbus maintains a more modest growth rate. And when there's a softening or a recession in the economy, Columbus maintains a very moderate amount of say loss or downturn from the overall economy. It's got the economic drivers of the school and the government and the Fortune 500 companies. You've got healthcare, lots of like hospitals and specialty hospitals, and logistics centers. It's a huge transportation hub that is within 10 hours reach of like 80% of the country. It's got a very nice central location. So this is the big kind of elephant in the room, if you will, and that's this Intel investment that was just announced in February, I believe, end of February, and it is just absolutely rocked the world of this of Columbus in general, but in this particular submarket of New Albany. It's an initial investment of $20 billion in capital. We're talking about 3,000 high-tech jobs that will be created, high-paying high-tech jobs, and 7,000 construction and support jobs that will be created in this immediate submarket. Additionally, there could be as much as $100 billion over the next decade as this facility expands and is added on to. So the amount of jobs that would be created in those phases of growth would, of course, just go up. So I mentioned that we basically negotiated this deal and put it under LOI. And right as that happened, they made this a really seismic announcement. And, to the point that Time Magazine had, wrote a feature article about this investment and the implications of it. So if you're looking to ride a economic expansion wave and be insulated from things like a downturn or even a recession, this has the economy and the dynamics of a submarket that's going to do very well moving forward into whatever we're headed into in the way of the overall national economy. So this is an extremely exciting thing for us. We were obviously thrilled, and this was an announcement that was made without a whole lot of knowledge, at least on the mainstream level, that it was coming. So as all of you know, we've got a global shortage in superconductor chips, and this is Intel's large answer to that problem. And by the way, construction is going to begin in October. They're fast tracking this facility because of the shortage of microchips, and this will be hopefully a really good answer to that particular problem on the global level. So moving on, here, this is a little bit more about the Intel facility. You can see an overview of the site and a mock-up of what it will look like. And in the lower right-hand corner, you've got a map of where our subject property is that we're acquiring, and the site of the Intel factory. So we're 9.5 miles from the site. And you can tell that the site is actually nothing at this point other than farmland. So there's not a whole lot of immediate housing available. And
yes.
So
Charles,
just see about muting that person. And so really this central New Albany area is really the closest
perfect.
the closest economic center, if you will. that has housing and everything else, retail and hotels and that sort of thing.
Two
So
things that matters to
enough
you.
on the Intel project for now.
Assembled for an
We'll
extra
come
50
back to
bucks.
that.
It's built, ready to go. We'll throw it in the car. You don't have to build it. So up to you. Building it really is not that complicated. It's probably going to take you around 45 minutes to an hour to build. Do you have some already built? We do.
I apologize for this.
Yeah.
I need to.
Next thing is locks. I don't know if you're here to lock your bikes, if it's very have locking solutions.
Figure out who this is.
I think it's Charlie.
Okay.
If everybody could just mute themselves, that would be appreciated.
Appreciated. I don't see Charlie. There he is. I see him. Okay. Okay. So a little bit more about the new Albany area and submarket. Average apartment rent is across all apartments is $1,465. We had a year-over-year increase of 12.7% in rents in 2021. 2022 is projected to be another double-digit rent increase. We have not underwritten that level of rent increase into our deal. We've been more conservative with that, but that's the reality of what's going on here. And this is all before any capital investment was made or even any knowledge of the Intel facility was made. So the chances, the upside here on rent increases in the immediate market is significant. One of the reasons for that is that the household or the median house price in New Albany is $750,000. So you can, in your head, you can run the payment on that and realize that a $1,465 apartment rent is going to be very affordable and really the most affordable housing in the area. There aren't many apartment communities around in the immediate New Albany area. In fact, we had to take some rent comps from a little further away than typical because of that. So at the end of the day, our rent levels will be about the most affordable housing in New Albany and in that area. And that's super exciting because we anticipate a very high demand on these properties, especially as literally 10,000 jobs are created and you have a strong need for housing for those people to have a place to live. And we anticipate our demand on our rents and our upward pressure to be very healthy. I mentioned Alliance Data a little earlier. Amazon has 2 delivery stations in and around Columbus. There's logistics. There's NetJets is based in Columbus. So you've got a lot of air and airport activity. It's an inland port at the Rickenbacker International Airport there in Columbus. So there's, like I said, a lot happening in the way of economic dynamics and employment. So Chelsea, I'm going to let you take over at this point and talk a little bit about the business plan.
Yep, thanks, Tate. Now that we've gone through the leading up to of why Columbus and why New Albany, we're going to talk a little bit about the subject property, 43 at New Albany, and our business plan. So there are some folks on this call today who have invested with GreenLight before, and largely we have done B or mostly C class assets, and we're really excited about an A class asset because it comes with a lot lower risk, and there are no significant value add opportunities here from a construction standpoint. This is truly an opportunity where our in-place rents are significantly below market value. And we determine those rents based upon what Tate had just mentioned, our comps. So we look up in a 5-mile vicinity, what are other new construction or relatively new construction A-class communities renting for? And based upon that, we come up with our target rents. And what has happened at 43 at New Albany is that the current owner has a property manager in place who probably wasn't best suitable for this particular asset. They actually have experience more so in student housing. But needless to say, the rents are $200 to $300 below market value, meaning that when we come and take over ownership, we are planning to, we are going to bump rents immediately upon the renewal of leases, which means somebody who's a current tenant has the opportunity to renew at our higher rent, or we have a new lease signed at the adjusted rent. So this is more, and then beyond that, it's really just an organic, natural rent growth. In addition, we do have garages and storage. They are currently being rented, however, also below market rents. So we are planning to bump those by $25 to $50 a month. And that is part of our other income. We are working with a property management team called the WEILER Management Company. We've been closely aligned with them and strategizing about what this, this business plan is going to look like. And 90 days ahead of all leases expiring, we are going to strategically be working with not only our teams, but our tenants to see, what is the appetite for people to stay at these adjusted rents, or are we going to be turning over units and getting new tenants in? Our goal, of course, is always to get to market rent, and to do so with limited vacancy. Additionally, we're finding that there's some improvements here for marketing strategies. And in addition, targeting some short-term premium rentals. And this would entail, traveling nurses or an executive stay. This is very common to have somebody come put a contract in place, especially nurses, to come for 3 or 4 months and pay a much higher premium. It could be $1,000 more per month on top of our normal rent for a short-term stay, and that could be furnished or unfurnished. So we haven't put that into our underwriting, but it is probably a road we're going to go down to increase our income. The exit strategy, we are planning to hold this property for 5 to 7 years. That is always going to be pending market conditions. However, the really good news is that we do have fixed debt in place at 4.25%, and that's 5 years fixed with a 5-year extension. So everybody is aware right now that interest rates are going up. So to be able to have locked in this debt at that rate is really imperative for the success of this property, and not having to worry about any adjustments down the road. So that's a big thumbs up. Here's the opportunity overview, kind of just the bread and butter. Our purchase price is $9.3 million, which equates to about $216,000 per unit, or in some case we say per door. The total equity required, meaning investor equity, is $3.6 million. And we will be doing a 6% preferred return to our investment group, meaning that from after we've paid debt and expenses, the first 6% of cash flow is guaranteed to the limited partners. We are the general partners, GreenLight, Thompson Multifamily, anybody who else is on the ownership side. So we see it that our investors get paid first. There is a partnership split, and that is a 60-40, meaning 60% goes to the limited partners and 40% to the general partners. Really want to note a couple of things on our projected returns here. One is that you, as an investor, you get paid 2 ways. You get paid from the cash flow of the property throughout the lifespan of the investment. And then additionally, when we sell the property, you make a much larger chunk of money. So what that looks like is, for example, if $100,000 over the course of 7 years, you will come back with $182,000 plus your initial capital of $100,000. So that's $282,000, which would equate to a 2.2 0.82 multiple equity multiplier, excuse me, on your money. And also another key metric here is that your cash on cash, if you want to look at it from a different standpoint, is going to be about 8.5%, and that will get paid quarterly. The internal rate of return, not everybody will necessarily be familiar with that metric, but it is key in our underwriting, is at 18.44%. And last but not least, we will be doing a cost segregation, and there will be significant depreciation and tax write-offs, and that is just to be determined. But as an investor, you will get a proportion of those write-offs that can be used for your losses, essentially passive losses on your tax returns. I won't get too much into the weeds here, but everybody at this point knows that technically this is Columbus. However, the submarket or neighborhood is New Albany. We have a mix of 1 bedroom, 1 bathrooms, and 2 bedrooms, 2 bathrooms, which I do want to note that it's very desirable and uncommon to have in this, or we've seen in our comps, to have both a 2-bedroom and a 2-bath. Oftentimes it's 2 bedrooms, 1 bath. This is considered a Class A multifamily. And as you've seen in the photos, it's a mix of both brick and siding. We'll be obtaining a new loan here. And just to reiterate, it's a fixed 4.25% rate. So you might be wondering, what does this look like as the capital stack? So the capital stack refers to the overall equity that is being used to purchase this acquisition. We have our senior debt, which is our fixed long-term debt at $6.45 million. And then we have a Class A, which are shares. Essentially, you're buying a share to be a part of this investment and own an owner of a share within this investment group, is a $3.6 million. That is our equity raise. I'm not going to go too much further into our sources and uses. This will be in the recording as well as the OM, but I do want to note that our cap rate at purchase is just under 5%, and our pro forma is just under 10%. And Tate did mention earlier, we're currently 75% occupied and trending to be 100% by June. We will be closing at the end of June. So and as per our loan, we can't close unless we are at least 90% or higher, which at this point is absolutely not going to be an issue. Okay, some fun stuff. Let's talk about the fixtures and finishes. It's A-class, brand new. The tenants who are living here now are the first ever to live in this community. And the developer who we're purchasing the community from, he really spared no expenses here. In fact, he might have gone a little over the top in some cases, but we have quartz, waterfall, countertops here, very luxurious, common in brand new homes. We have a composite flooring that's from China. That's really, truly one of a kind. It is, as he explained to us when we were on site, bulletproof. There's little to no crime in this neighborhood, though, I will note. We have two-tone cabinets, wood cabinetry, soft close drawers, stainless steel appliances, LED lighting, just a bright, modern, and refreshing scheme. LED mirrors in the bathroom, which if you don't have one, they're pretty great. And just designer backsplash, not the best photo, but generally speaking, this is what you would expect from a luxury A-class community. Here's a great overview of the property. So I just want to note, and it'll be maybe a little hard without a mouse here. If you're looking at the front of the property, and to the left, we have 2 garages that are, thanks, Dave, are detached. Those are individual garages that we're renting out. Each garage is equipped with electric vehicle hookups. In addition, there's storage units. So to have garage parking in Columbus is a premium, and people are absolutely willing to pay for it. Of course, there's ample parking around the property. I also want to note that the property is located just off of a main street. However, it's set back behind some retail, and I believe there's restaurants as well. So although it is a walking distance and driving distance proximity to all of the main attractions, it does give a sense of privacy being set back off the road. One thing that really excited us particular about this property is, with an A-class property, of course, there are some amenity areas within the community. So we have a gym, we have an on-site leasing office, we have a community room. But what we think to be is probably the best, totally the best one, I would say, highlight of this community is that we are adjacent to a huge state park, and that is an amenity space you can't put a price tag on. And this park has walking trails and as you can see, is also surrounded by very beautiful single family homes. And behind the property, I know Tate, you can point out with your mouse, there is a daycare center with a playground to the right. So that building right there does not belong to us. However, to know that we're in a location next to a daycare center, it is incredibly safe, and we see that as a huge plus. Here is a front angle, and you can see the backside of the daycare. But in any event, there's a breezeway. Our community consists of 2 buildings connected by a 2nd floor breezeway. So at no point do tenants ever have to go outside in the winter. They can, if for any reason need to get to the gym or the main leasing office in the building in the forefront here, they can do so via that walkway. Tate, I'm going to hand it back to you for the next part.
You betcha. So thanks, Chelsea. That was awesome. This is a breakdown of our pro forma that's also in our offering memorandum, which is available on our investor portal. You should all have links to that in your email. If you don't, for whatever reason, please do reach out to us. We will be sending another email with links to this. I'm not going to deep dive into the pro forma. I mainly wanted you to see that it's here, it's available for your perusal, and it really breaks down on a year-by-year basis the budget for the property and distributions to our investors. This is another reiteration of the returns, and this is the overall return on the deal. You can see again, this is you get 182% return over the course of the deal on the investment. So it's a 2.82% or 2.82x equity multiple, which is very strong. Our IRR is 18.44%, which is also very strong. And cash on cash is 8.5. Average annual return is 26.09%. So all very strong metrics over the course of the 7-year hold, 5 to 7 year hold that we're projecting. This is a breakdown of what happens in the event of a $100,000 investment. This shows you what the full return would be at 182,000. Of course, you get your additional your 100,000, your initial investment back at the exit on the property. So the full amount that you get back on a $100,000 investment is 282,000 over the course of the 7-year hold. So one important thing to note is that the decision to sell will be analyzed in a consistent basis in consideration of the market and property conditions and the overall economics of the deal. We're going to make that happen when it's most beneficial to our investors. Quite frankly, the rent increases that we've projected, I think, are very modest in comparison to what could happen there. And so there's a pretty good chance that we would achieve our pro forma and net operating income by year 5. So that's why we've presented this as a 5 to 7 year hold. Moving on here. We're getting there, guys, almost there. So we mentioned before the WEILER Management Company. WEILER Management Company has been around for of quite a while now, 80 plus years of industry experience. They really dug in with us on underwriting this deal, analyzing our market rents, analyzing our business plan, and really participating at a high level in the initial due diligence of this property. We're really excited about working with them on this. We feel like they are, based on their portfolio that they currently manage, they're a great fit for this. They're very excited about the property and feel very enthusiastic about the business plan and our chances of achieving what our targets are. So we're excited about that partner on this process, in this process as well. Chelsea, back to you on this the last couple slides here.
Yep. So this is kind of we're gonna wrap up here. So really important to take some notes. And again, we'll be sending out this webinar recording. So the subscription process right now, docs are available and funding is open. Of course, today, May 10th, we are having our webinar, or perhaps you're listening to this a couple of days later. May 25th, the PPM, which is the private placement memorandum, needs to be signed and submitted. And by June 3rd, funds are to be received and tentatively closing on June 24th or sooner. I do want to note that there are going to be wiring instructions to send in funds. It's really imperative that you call the bank and just double check accounting numbers, verify everything via phone. We have seen in the past, not us personally, but we've heard it's not uncommon to get hacked. So, and that's just with any sort of wiring for that matter. But in any event, and also once you do wire your funds, please follow up with somebody from the GreenLight team to let us know that they've been sent so we can check with our bank that they've been received. And throughout this process, of course, if you have any questions, we are here to help. After closing, we have an investor portal that everybody, when you signed up for the webinar, you were able to access our investor portal, and that's where the PPM is. That's where the instructions are for sending funds. But it's also going to be basically the portal, which houses all of our investment documents. You'll get your K1s, which are your future tax documents. We'll have investment performance metrics and other really important information. We'll also be in regular communication as we schedule quarterly updates. We'll send newsletters updating you what's going on at the property, how our business plan is going. Maybe we've had an event. We'll also talk about the financials. Quarterly distributions will be made, but just please note that the first one will start within 6 months of ownership. So we're tentatively planning to make our first distribution around the first week of October. However, your funds, when we close on June 24th, will start accruing. And those funds will be paid directly, direct deposit ACH payments. So we will have you set up in our system, and it's really easy. And also, we're just here and available for you via email, text, call. If you have questions at any point, our team is readily available to speak with you. I do want to kind of end on one last note that we, prior to presenting this webinar, we've had some commitments, and that's without people really even getting the full gist of the deal. So we do expect that this opportunity is going to fill up fast, and we're really excited about it. We think, as Tate mentioned, I mean, we can't emphasize enough that this market was already thriving with, high demand and low availability as far as occupancy in apartments here. So to have the Intel chip factory come in, I think is just going to, really put us on this amazing wave for the next 5 to 7 years that, quite frankly, we wouldn't have gotten this property at this price had we put it in contract after that announcement. So I think the owner might be kicking himself in a little, but we're going to take it as a huge win. So with that being said, Tate, I'm going to hand it back to you to kind of just wrap up here, and we can probably start answering some questions if there are any.
You bet. Yeah. So here, this is our contact information, our email addresses for myself, Carl, and Chelsea, and our website as well. You can go to our website. It has our investor portal link on it. It has everything that you need to subscribe to this opportunity. And we'd love to have you on board with us for this ride. It's going to be really exciting. I think the upside is very promising, and like I said, we'd be honored to have you as a part of it. So with that, we've got about 12 minutes till the top of the hour. So we'll go ahead and open the floor up to any questions that you might have. And feel free to just go ahead and unmute yourself and speak up.
Kate, I know we have one question here from Mike. What is our exit cap rate? Our exit cap rate is 5.5%.
Which is for Class A in Columbus is
High.
decompressed from where things are currently.
Yeah, we're currently working on some other communities here in town, and the stuff is trading in the 3s.
3s and 4s, yeah.
Yeah.
We answered all the questions in the presentation. Somebody's got to be wondering something about the deal.
Mike also asked, what do we estimate the cost seg loss for year 1?
That's a bit of a tough one, especially with a brand new property, how the cost seg study is gonna work out. It's gonna be significant. And we won't really know until I could kind of ballpark it for you, but I don't wanna overpromise and underdeliver on that. So it'll be significant. Let's just say that.
So expand upon the 12.7 estimated annual rent increase. I just want to clarify that we are not estimating in our underwriting a 12.7% estimated rent increase. That was this submarket over the last year experienced that rental increase. We have been much more conservative. We are in the single digits. In year 2 and 3, we're at 7%, and then we go down to 5% in year 4 and onwards. However, we expect to do much better. We have not underwritten that.
Good questions so far. And yeah, Mike, good comment. You typically have seen 60 to 75%. That's about where I would be on the estimation without having done the study. So, how are you splitting depreciation between the GP and LP? The LP gets all of the depreciation, the way that we currently have things set up. Isn't that correct, Carl?
Correct.
Yeah. So Terry had a good comment. It's important to talk about the median income in the area. The median income in the area is over $100,000 in the immediate area. The greater New Albany is even higher than that. I mentioned the household, the median house value is $750,000 right now in this market. So housing is affordable housing, or relatively affordable housing relative to the rest of the market, is going to be a premium and going to be in high demand. Mike has a good question. Given the size, will there be employees on site, or will it be managed off site? So we will have basically a leased up property, and will not need a full-time leasing agent on site. We will have one basically on call, and they'll have also part-time office hours. We will have a full-time maintenance person on staff. So let me see if there's any questions that we missed. There we
I
go.
don't see any others.
Yeah, so again, the floor is open. Got a few more minutes here at the top of the hour. If we don't have any other questions, we can adjourn. We just had Nail, Mr. Benjamin, chime in here with a good question. Is there an underdeveloped portion of the property that can be used for further development? Good call. There's really not on the immediate property. However, there is a vacant lot immediately adjacent to this property that is developable. It's not very big. So we have not really turned the screws on like what exactly we can do there. It's not the same owner as who we're buying from at this moment. So that's an opportunity that we have not explored yet. Are there any plans for further multifamily development in the area? Yes, there's plans for tons of development in the area. And that's the reality of this submarket blowing up. It was like Chelsea said, it was already thriving and growing fast. And then you drop a $20 billion investment right in the middle of it. There's going to be a lot of new development in the area. So good question, Captain Kidd. Scott Kidd has the coolest job in the world. He's a captain of private yachts for people. That's so awesome. So yeah, again, floor is open if there's any other questions. Will your company be looking for new construction opportunities? No, we're not developers. We're not new build developers. We're apartment syndicators and apartment acquisition. We're an apartment acquisition team. So we buy existing properties. Like Chelsea said, we are into quite a few Class C properties, and we're really excited about moving into a Class A, especially one that's brand new, because you've got the risk mitigation of taking out any kind of value add or construction risk. And when you've got literally everything's brand new, everything's under warranty still, and you're not implementing a business plan that requires a heavy lift or even a light lift value add, it's a really exciting prospect for us.
Yeah, I think we should also add, Tate, we do currently own in Columbus. This will be our fourth community here. So we have experience with the market, and we in different asset classes, and have been owners and operators here. And additionally, we own 3 communities in Oklahoma City. So we are solely focused in Columbus and Oklahoma City, and we've built our teams and infrastructure and are well poised to continue to grow, and are more excited about these A-class opportunities than we have been before. So it's exciting.
Scott Kidd, how is the warranty structured? Scott, it's a 1-year construction and materials warranty. Yeah.
We've done thorough physical due diligence on the property, despite it being brand new. And we are, any sort of minor repairs that need to be done are being taken care of prior to closing or within a 60 to 90 day window. So we, just because it's brand new, we didn't just assume that everything was perfect. We have crossed our T's and dotted our I's when it comes to inspections, environmentals, surveys, you name it.
So really, I guess to wrap things up in conclusion, we, like I said in the offset of the presentation, we feel very fortunate to have landed this deal in the timing that we did. We really do feel like we caught lightning in a bottle. And if you are interested in participating in significant economic expansion through this submarket, this is a tremendous asset to do that with. So, and we'd love to have you on board. So with that, thank you everybody for your time, for your interest, and please do reach out to us personally if there's any further questions or if you need any help subscribing. We do expect to be oversubscribed likely at the end of the day, and we expect this opportunity to fill up pretty quickly. So we're here to help any way that we can. Thank you, everybody.
Thank you.
Everybody take care.